People don't realize that gold's appreciated by 9.9% per year since 2000. It's outpaced everything. It's accelerating now because the central banks are accumulating it and they don't care. You see it's the positive real yield and the strong dollar, and gold's still moving up. That's very, very bullish. Gold has doubled its performance for the last 25 years, doubled. And it has no counterparty liability. It has that historical significance. It can't be inflated away or defaulted upon. It is now the second largest asset in central bank holdings. It is the only other tier one asset in the world.
Central banks have been gobbling up gold. In terms of international reserves, gold now constitutes nearly 18%, the highest in almost 30 years. It has become the second largest asset in central bank reserves, surpassing the euro for the first time ever. Based on responses to the World Gold Council's 2024 Central Bank Gold Reserve Survey, their appetites for the yellow metal aren't going to be satisfied anytime soon. Why do central banks hold gold in their reserves? When asked about specific factors that influence overall reserve decisions, interest rate levels ranked first. Inflation concerns and geopolitical instability were the second and third biggest factors influencing reserve decisions. This likely reflects the growing de-dollarization trend and worries that the US and other Western powers could use the dollar as a foreign policy weapon. In fact, 32% of the central bankers surveyed admitted that de-dollarization was a factor in their decisions to hold gold. Andy Schectman, co-founder of Miles Franklin, mentioned that the relationships of interest rates or a strong dollar mean nothing to the central banks. They just want the gold. Slow and steady continued to be the name of the game in the gold market this week, as the yellow metal once again traded in a narrow channel between $2,300 and $2,340 per ounce. UBS maintains a positive outlook on gold, citing central bank demand, geopolitical tensions, high inflation, and potentially lower U.S. interest rates as supportive factors. At the same time, the U.S. Treasury yields were higher on Monday as investors awaited key economic data due this week and digested the latest inflation insights. Schectman argues that a positive real yield on short-term treasuries, which should be detrimental to gold, hasn't stopped the central banks from accumulating it. Before we explore further, be sure to subscribe and click the bell to stay tuned for more engaging content.
These relationships of interest rates or a strong dollar mean nothing to the central banks. The central banks don't care about any of that. They just want the gold. And so, the theory is if you have much higher interest rates, there is an opportunity cost for holding something that doesn't yield any interest. People don't realize that gold's appreciated by 9.9% per year since 2000. It's outpaced everything, maybe with the exception of Bitcoin. It's accelerating now because the central banks are accumulating it and they don't care. You see it's the positive real yield and the strong dollar, and gold's still moving up. That's very, very bullish. I think these relationships mean nothing to the central banks. And I think that's really the most important thing to keep in mind is that you have flows of metal at record levels leaving the exchanges, repatriation. We talked about India, who bought 1.5 times the amount of gold. All of last year, they bought it in the first 4 months of this year. And they repatriated 100 metric tons from the Bank of India. They now, in essence, hold all of their gold. From the Bank of England. The Bank of England is by proxy the LBMA. And then just a couple of weeks ago, we talked, probably when I was on your show last, we saw Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia bring all of their gold back from the COMEX or from the New York Fed, which is in essence the COMEX. And you're seeing these central banks, they don't care about a positive real yield. And let's just call it what it is. This positive real yield is fugazi. I mean, yeah. So, that's if we believe inflation's 3.5% and you're getting 5% in a short-term treasury. But we know that the inflation numbers are a lie. We know that inflation is much higher than that. But even still, if we take it at face value, when you have a positive real return in short-term treasuries, it should be the death knell for gold, and a very strong dollar where it should be the inverse of gold. And I think that's incredibly bullish. And it just shows how much these central banks want to accumulate gold. They're the ones, I think, that are keeping the price elevated as they continue to accumulate it, because the unit, as we know, is 40% gold, which is the only other tier one asset in the world. So the central banks know the playbook. And that's what I would take away from it, is that if this positive yield on 10-year treasury or on the short-term treasuries was so enticing, then why are all of these countries selling treasuries and buying gold? And I think that's really what I would take away, is that in the end, they just want the gold and they don't care about any of these other relationships. Gold has doubled its performance for the last 25 years, doubled. And it has no counterparty liability. It has that historical significance. It can't be inflated away or defaulted upon. It is now the second largest asset in central bank holdings. It is the only other tier one asset in the world. And I think when you realize and look at it that way, a country that should be clinging and nurturing its world reserve status as a privilege, we've done everything we can to shed it and lose it. So it's not even as much gold as it is the dollar. And unless you think the dollar will spike in value for some reason, then holding gold right now has never been more important, and probably carrying the least amount of downside risk, even though we're at or near all-time highs, because I think the dollar, in essence, is getting close to, the ninth inning, or maybe the end of the ninth inning in terms of its run. And gold is just being, I think, these central banks are recognizing gold once again for what it truly is and what it has always been, and that is, wealth. So I don't think that people really need to worry about gold falling to the downside unless you think there's a miraculous rebound in global strength and trust in the dollar and in the U.S. Treasury market.
Two global events in less than 7 days representing two different global outlooks concluded in the first half of June 2024. The G7 summit in Italy had heads of state of the United States, Germany, France, Italy, Canada, and Britain, while the chiefs of the European Council and the European Commission attended the meeting between June 13th to June 15th, 2024. On the other hand, the BRICS meeting of foreign ministers took place between 10 to the 11th of June 2024 in Russia, and unveiled the agenda of the forthcoming BRICS heads of state meeting in October that would decide on a new banking system and around 20 other initiatives for supporting health sector, economy, transport, tourism, trade, industrial collaboration, and others. Schectman highlighted the significance of these developments, noting Russia's strategic involvement and the architectural role of figures like Sergei Glazov in promoting a basket of currencies and commodities, with gold recognized as a pivotal asset. On January 1st, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates joined BRICS, making it a 10-member bloc, while Argentina has pulled out of its plans to join the grouping. Now, let's delve into the video.
You had a meeting in Novigrad just a couple of weeks ago, and it coincided with the G7 meeting where the Royal Crown Prince was invited to the meeting. And he turned it down. He said he had other things he needed to do. So he turns down a meeting to the G7. And now this is just a few days after they did not re-sign the exclusivity deal with the United States, the Petro deal, where now in essence they will openly sell oil in other currencies. But they turned down the meeting to the G7 and sent their finance ministers to the meeting in Russia. And this is a very big deal, because what came out of these meetings is anything but trivial. You had how many people? 21,000 people that showed up at these meetings, first and foremost. Wow. And $80 billion worth of bilateral agreements were struck on the sidelines at these meetings. And these are deals that used to settle in dollars that are no longer settled in dollars. So you have 139 countries represented at these meetings, $80 billion in bilateral deals that are settled in local currencies. 59 nations, we are told after this meeting, plan to join BRICS. You're dealing with a massive growing chorus of countries that are finding safety in numbers. They talked a lot about the new settlement currency, which won't be a unified currency, but they basically called it the unit, and they've given it a name. And it was spoken publicly about by the head of the BRICS New Development Bank, who had 2 meetings with Putin. And, for 3 years now, I've been talking about the comments made over and over and over again by Sergei Glazov. the Russian finance minister and the minister of economic development for the Eurasian Economic Union, another entity that will join the BRICS 100%. In fact, there was recently a call by the president of Belarus to join the Shanghai Cooperation Organization and the Eurasian Economic Union into the BRICS. I've been saying that for 3 years. They're all the same countries, and they will join. But Glaziev is the architect of all of this. And originally, he talked about a basket of currencies and a basket of commodities. Now, it became very obvious to me since the very beginning when he said that gold would be central to this basket because the BIS reclassified it as the world's only other tier one asset, the BIS being the Bank of International Settlements, the most influential bank in the world, the central bank or central bank as it's called. They said, yeah, gold is the only other tier one asset. And so what we are seeing is the framework out of this meeting where 21,000 people attended in 139 nations and 80 billion in bilateral deals were signed. 59 nations have pledged to join the BRICS. This is just the very beginning. But when you realize that they are now going to allow these countries to maintain, autonomy, have their own central bank digital currency, trade with one another in their central bank digital currencies, and then settle in the BRICS settlement currency, which will be gold and a basket of other currencies in the BRICS, the framework is there. And so this de-incentivizes all of the Southern Hemisphere to continue holding treasuries. It incentivizes them to hold gold and to accumulate and to repatriate. And that's exactly what we are seeing. So it's a very big deal, man. And when you see Saudi Arabia become a full participant in Enbridge, this is a very big deal. It's a program that was designed by the United Arab Emirates, who just joined BRICS, along with Saudi Arabia, China, Hong Kong, and Singapore. These countries they all realize that trading on the SWIFT and trading in dollars and treasuries, putting reserves in treasuries, is foolish. And we've proven that by not only sanctioning Russian assets, but confiscating them and using them to buy weapons from the military-industrial complex and send them to the Ukraine to fight the country we stole them from. This is a problem. So this acceleration, it's happening and it's real.
The US dollar is still by far the most dominant global reserve currency among many reserve currencies held by central banks, but its share has been eroding for years as central banks have been diversifying to other reserve currencies and also to gold. And 29% of central banks expect to boost their gold reserves in the next 12 months, according to a survey the Council conducted from February to April. That's the biggest figure since the Council began the survey in 2018. In what ways might the trend of boosting gold reserves among central banks influence global commodity markets and pricing dynamics? Your opinion matters. Drop your thoughts in the comments, hit the like button if you enjoyed this, and subscribe to stay informed on our journey together.